Debt. This is one of the things that is really hurting the U.S. economy. But it is not the only thing. According to recent reports, credit card companies are actually killing the U.S. economy. And this is shocking news because what we are now starting to see is that the American people are struggling to pay their bills, put food on the table, keep a roof over their head, all because their income is actually not greater than their expenses. Now, I want to get to what's going on and why credit card companies are really killing the U.S. economy. But again, all I ask is if you can do one thing, takes 2 seconds, go ahead, hit that like button for the YouTube algorithm, and also consider subscribing so you never miss an update. Now, let me ask you this. Do you use a credit card? That little piece of plastic, do you use that to pay for food, to pay for gas, to pay for utilities, maybe just to go on vacation? If you use a credit card or have used a credit card within the past month, okay, comment down in the comment section below and type in, I use credit. Now, for me personally, I use credit cards all the time. Number one, I feel that they have, better security just in case something were to happen. I don't like spending or using my debit card. The other thing, credit cards in certain instances can give you cash back. They can give you air miles. They can give you other things as well, which is great to have. But not every single person uses credit. Now, I want to read you this article. Okay, in this article, look at this. Okay, it's from Fortune. It says Americans are so indebted that it's holding back the economy. These 4 key reforms could give them room to breathe. Now, I'm not going to get into all 4 of the key reforms, but we will talk about 3 of them later on in this video. But I do want to read a little bit of that article and then show you something else. Look at this. It says, while government debt has been dominating the news, there is far more private debt than public debt in the U.S. economy, and it represents the greater economic challenge. As of year-end 2022, public debt totaled 123% of GDP, while private sector debt totaled 165%, so bigger. The level of private debt, student debt, mortgage debt, small business debt, and more has more than doubled as a percentage of GDP since 1980. It stifles economic growth because it burdens individuals and businesses. In fact, debt has been consistently growing faster than GDP, which means that the burden on the private sector is almost always increasing. Then it goes on to say debt can be employed productively. In fact, an economy can't function without debt, yet debt is a paradox. Its overuse can bring harm and even disaster. That's true. But what's frustrating about all this is that if you do not have debt, how do you go and buy a home? If you don't accumulate debt, how would you go and buy a vehicle? Could you save up? Potentially. But how long would it save up? Would you have to save up to buy a $40,000 vehicle? How much would you have to save up, and how long would it take to save up, let's say, $400,000 to go and buy a home here in the United States? How long would that take? Most people would say they would never get there, and that's likely the truth. But here's something else I want to just show you, and this has to do with credit cards. This is an article from CNBC. This says average credit card interest rate is a record 20.69%, but 0% offers are still available, experts say. Now, 20.69%, this is the highest it has been. The reason why I want to bring this up is because we're also at the peak of total debt, okay? This is credit card balances in the U.S. are well above pre-pandemic levels, okay? Keep in mind, this is where the pandemic started, right here, okay? This is March 2020. We're at $856 billion. But then guess what happened? The U.S. government gave us stimulus checks. They gave us enhanced unemployment benefits, additional $600 per week, right? They gave us PPP loans. They gave us all this stuff, right? So we went from $856 billion down here to $740 billion. Yeah, almost a year later, $740 billion about a year later. That was the bottom. But again, then all the stimulus ran out. We stopped getting anything, really. And so then credit card debt started to spike again. And we've run up. And as of January 2023, we're at $943 billion. We're just under $1 trillion in credit card debt. This is a revolving account. But here's the troubling part with all this. This is why credit card companies are killing the U.S. economy, is because, technically the Federal Reserve is hurting us as well, but this is their plan. If the Federal Reserve can come in, raise interest rates, it would actually kill spending. Consumer spending is going to slow down even more, which is exactly what has happened, because credit cards, we're now starting to see we are pretty much maxing out our cards. Now, and I've done this for years. I continually max out my cards, okay, or certain cards I max them out for businesses and other things, and then every single month I try to pay them off, right? Or I've been pretty successful paying them off. But again, you have to have money for that. Most people cannot do that. They can't just keep maxing out their card of $1,000, $5,000, $10,000, whatever it may be, every single month, max it out, and then pay it off. It just doesn't work like that. What's happening is this. We just continue to see our credit card debt keep going up and up and up, simply because all we can do is continue to put a little bit more, little bit more spending on them, right? Pay for additional things, purchases or whatever, and then in the end, we just pay the minimum payment. That's devastating. That's what's really killing the U.S. economy, is because now we got less money to go and spend on food, on eating out, to go spend on buying a new vehicle, getting new electronics and new furniture, going on vacation or maybe a cruise. We can't do that because we don't have the money. Again, this is a major issue. Now, here's something I just want to say, okay? And I bring this up. This is in this article. I want to bring this up because some people have brought this to my attention, that this is what they're doing. Okay, look at this. This is from the CNBC article. It says balance transfers are the best weapon if you have credit card debt. Look at this. It says my top tip is to sign up for a 0% balance transfer card. These allow you to avoid interest for up to 21 months. Now, this is not financial advice, but I just want to clarify this. I've seen a lot of people get a 0% transfer card, okay? And what happens is when you transfer a balance from one credit card to another, if it's a 0% balance transfer card, that the new one that you're getting, let's say you have 20% interest over here, and let's say you're paying, let's say it's $1,000 credit line, okay? Guess what? This is 0%. So if you transfer it, you just got to make the payment, but you get 0% interest. That works out great, right? But here's the problem. What happens with a lot of people is they get 0% interest, so they make a very small payment, minimum payment. Sometimes they miss the payment, and that is where it goes from a 0% transfer card to then you're possibly going to pay 22, 23, 24%, and maybe even fees to transfer that amount. Don't do that. Now, one thing that I've been asked a lot recently is, well, is the U.S. Government going to get involved? Are they going to help us? Are they going to provide some additional relief? Well, in this one article right here from Fortune, they actually talk about what the U.S. government could potentially do. Well, here are some of the things that they brought up. And I want to just mention this because these are things that I've talked about in the past as well. Okay, student debt relief. This is one of the big ones. Okay, and the reason why I say this is one of the big ones is because if U.S. lawmakers decide, you know what, the American people need additional help, we could probably do something to relieve some of this economic pain. Well, what could they do? One thing that they could do is that they could actually pause interest again. Right? We've seen this. They can also do some form of forgiveness we've seen this as well. Or potentially do loan reform. Make it easier for people to pay down these loans. That's what we could see. But again, it doesn't stop there. Another thing is mortgage debt relief. And we've had this in the past as well. Just consider what happened over the whole pandemic. We had forbearance where you did not have to make a payment for months. I think you could get up to like 18 months of forbearance. That was crazy. And then again, you weren't making a payment on interest only. You weren't making a payment on your principal. No, you didn't have to make a payment at all. And that month's payment would get tacked on to the end of your loan, the end of your 30 years or 15 years or whatever type of loan you had. The other thing they did, they added a 40-year program. So if you had a 30-year loan, you were at risk of becoming homeless, guess what? You could go to your lender and say, hey, I'm struggling. I can't keep up with my payments. What can we do? They could potentially extend your loan additional 10 years, get it to 40 years. Yeah, that's still a possibility. Because that's still on the table. You can still do that. Another one, lawmakers are considering increasing tax credits for mortgages. Yeah, it's still there. The other one I want to talk about is this one, bankruptcy law reform. One of the biggest things we've seen recently over the past really 10 years when it comes to bankruptcy and credit card debt, okay, how does this work? Does it make sense to go and file bankruptcy, pay whatever thousands of dollars to go and have a bankruptcy lawyer go and do this for you? Well, here's what this article had to say, and I want to read you this one right here. Okay, this is what I want to read you. It says, healthy bankruptcy reform should allow borrowers to modify their mortgages in bankruptcy, which is generally prohibited by current law. It should allow renters to continue paying their rent if this would avert eviction. Debtors who are no longer residing in a home should be released of future liability for taxes and code violations. Debtors should be able to keep their cars by paying the lender the fair market value of the car over a reasonable time, because as transportation allows them to get to work and care for other members of their household. And student loans should be discharged in bankruptcy, just like other consumer debts, and so should be accumulated local fines and fees. We must give families a new start after bankruptcy as their financial lives are rebuilt. Everyone benefits, lenders, borrowers, and the economy as a whole. That's what that article had to say. Now, I wanted to read that because this is actually pretty big. I just got an email a few weeks ago from one person that is highly considering filing for bankruptcy. And she says this is something that she needs to do. She's struggling to pay her car payment, and pretty soon they're just going to repossess her car. She can't keep up with her credit card bills because during the pandemic, before the pandemic, she had, I think, 8 credit cards. Then she was able to pay off, I believe, 5 of them. The other ones were very low. Then as the stimulus ran out, she started to run up the cards again. Now she can't pay them. She not only just has 8 cards, she now has 11 cards, which means she has 3 more, and she can't pay those either. So she's thinking about filing for bankruptcy, but again, is this the best move? Well, if there is some type of bankruptcy law reform which would allow her to potentially keep her car, that would be a great thing. Maybe stay in her home. Again, another good thing. But this is what she's talking about. Bankruptcy. Is this the only move forward? Well, I don't know. Every person's situation is different. That's why I recommend you reach out to somebody that understands your personal situation and they can guide you through the process. But the biggest thing here is credit card companies are killing the U.S. economy simply because of interest rates. They keep on raising rates, and as they raise rates, the payments get bigger. As the payments get bigger, the people that have that payment cannot make car payments, cannot make payments on their home, on their mortgage, their rent, cannot pay utility bills, cannot go and put food on the table, pay for medication that keeps them alive. This is a problem. Credit card companies are killing the U.S. economy. But what's going to happen from this? Well, I don't know for sure, but As we get more information, as we get more updates, I promise I will fill you in on all the latest news. All you gotta do is two things. First off, hit that like button on this video, consider subscribing so you never miss an update, and I will see you guys on the next one.